Hello students, today we will discuss a question that came in the accounts exam held by the Assam Higher Secondary Education Council. So the question that we have here is, briefly explain any 5 distinctions between revenue reserve and capital reserve. Before moving to the distinctions, we will first understand what is a revenue reserve and what is a capital reserve. So a revenue reserve is created from the net profits of a business arising from its normal trading activities. So by the word reserve in accounts, what is a reserve? It is an imaginary, we can say, like an account. It is an imaginary space where we save or keep aside certain amount of money for future use, most probably for future uses only, or any particular uses. So that in accounts we say that to be a reserve. So what is a reserve? It is a money set aside for different kind purposes by the business or by the accountants. So here, what is a revenue reserve? So a reserve created from the net profits of the business. So when the business earns profits, from the amount of profit, from that profit, a certain amount, a small amount is kept aside, and that we call is a revenue reserve. So a revenue reserve is created from the net profit of a business. And from where does the business makes net profit? From normal trading activities, that is from buying and selling or providing the services. So from these are the ordinary activities or normal activities of a business. So when a business sets aside a certain sum of money, that is certain sum of money of the net profit, from the net profit that is earned from normal trading activities, that set aside money, we call that as revenue reserve. What it does, or what it is generated from revenue profits. As I say, revenue profits are earned from normal trading activities. It is used for meeting future contingencies, expansion, or dividend distribution. So revenue reserve is, why is that money kept aside? For future contingencies, due to certain events we don't know, some certain kind of, for due to certain kind of losses, maybe there is a need for money arises in the future. It is known as contingencies. So revenue reserve is used for meeting the future contingencies, for expanding the business, to make to maybe to buy machinery, or to buy a new branch of that business, or to open a new branch of that business, that we call it expansion. And for dividend distribution, so paying dividend to the shareholders, for paying dividend to the shareholders, revenue reserve is used. So again, the example of revenue reserve is general reserve, dividend equalization reserve. And the purpose of a revenue reserve is it strengthens the financial position and ensures smooth functioning of the business. When a business creates a revenue reserve, it strengthens the financial position. Why? Because a certain sum of money is already set aside for future contingencies, expansion, and dividend distribution. So this was the concept of a revenue reserve. So when a business earns profit, a part of that profit is set aside, and that we call is revenue reserve. Now we move to capital reserve. So what is capital reserve? It is a reserve created from capital profits, that is profits not earned from regular operations but from exceptional or non-occurring transactions. So one example of capital profit is when, suppose, a piece of land is sold. So suppose that piece of land was bought by the business 5 years ago, or say for 1 lakh rupees. Now after 5 years, again that is a fixed asset. Remember, it is a fixed asset. Land is a fixed asset for the business. So when that land is after 5 years sold for 10 lakh, what is the profit the business gains? A profit of 9 lakh. That is, it is sold for 10 lakh, whereas it was bought for 1 lakh. So the difference is 9 lakh. Then this is the profit earned by the business. But you see, this profit does not come from normal trading activities. This comes from non-recurring transactions, because the business does not sell land every day. It is a non-recurring transaction, and all those kind of profits that are earned through the non-recurring transactions, just as I gave you the example of selling a piece of land, that profit is known as capital profit. So when mostly when the business sells fixed assets and earns profit, that profit is known as capital profit. So that profit is set aside by the business, and that reserve we call as capital reserve. So it is a reserve created from capital profits. It is generated from capital profits, that is profit on sale of fixed assets, even premium on issue of shares, profit on reissue of forfeited shares. These are the examples of capital profit. And it cannot be used for dividend distribution. Remember, the capital reserve cannot be used for dividend distribution. It is utilized for purposes of writing off capital losses or issuing bonus shares. So what is the purpose? Why is it or what use is the capital reserve? Of what use is it? It is used to write off capital losses. There even just like capital profits, there are capital losses as well that happens in the business. So to write off that capital loss, the capital reserve is used, and even for issuing bonus shares to the shareholders, the capital reserve is used. The purpose of the capital reserve is to maintain the capital structure stability and support long-term financial health. Again, capital reserve is part of the capital of the business, so it maintains the capital structure stability. So when a company decides to sell the fixed asset, it earns a certain amount of profit. That profit we transfer it to the capital reserve. So this was the concept of a capital reserve. Next we move to the distinctions. The first distinction, or the basis of distinction, is the definition. A reserve created out of revenue profits earned during the normal business operations. It is meant to strengthen the financial position and can be used for general business purposes, including dividend distribution. As I have already mentioned, what is a revenue reserve? So this is the definition. The capital reserve, it is a reserve created out of capital profits which arise from non-operational activities like sale of fixed assets or issue of shares at premium. It is used for specific purposes and cannot be distributed as dividends. I have already mentioned it earlier, the definition of capital reserve. Now, the next basis of distinction is source, from where the revenue reserve and the capital reserve is created. The revenue reserve is created from revenue profits, that is profits earned in a normal course of business through normal business operations. The capital reserve is created from capital profits, that is gains from sale of fixed assets. The next basis here is purpose. Why are these two reserves created, or the purpose of these two reserves? The purpose of the revenue reserve is used to strengthen the financial position or to meet future contingencies. The purpose of the capital reserve is used for specific purposes like writing off capital losses. So revenue reserve is created mostly to meet future contingencies, and capital reserve is mostly created to write off all the capital loss that happens. The next basis of distinction we have is legal restrictions. To prepare a revenue reserve, there are no legal restrictions, but the capital reserve, there are certain legal provisions mentioned in the Companies Act. So the business has to follow certain legal provisions of the Companies Act while preparing a capital reserve. So this is an important distinction between the two reserves. The next basis of distinction we have is example. The examples of revenue reserves is general reserve, dividend equalization reserve, and retained earnings. The example of capital reserve is share premium, profit on sale of fixed assets, profit on reissue of forfeited shares. So these were the basis of distinction between a revenue reserve and a capital reserve of a business or a company.